Good morning, everyone, and welcome to the European crossover webinar. And we do have the Bank of England um, this morning. We do have some UK data before we get there, but we do have Bank of England this morning at 7 a.m. Eastern time. I'm on Central, so it's showing me here at 6 a.m. Eastern. Later on beyond that, then we're going to have initial jobless claims, as well as Philly Fed, and that'll be actually at 8:30 Eastern here. I can remember days a few years back when Philly Fed used to come out at 10 a.m. Eastern. But anyway, at 8:30 Eastern for Philly Fed, and existing home sales are at 10 a.m. Eastern. Let me just move this out of the way. Okay, and we did have New Zealand GDP and Aussie employment yesterday, and we're going to get to that. Obviously, the big story yesterday was with the Fed. Now we're seeing the euro come back after the euro sold off. Show this here. We sold off, then we came back, then we sold off again or paired back again, and now we're starting to work a little bit higher here. So really a bit of a mixed bag here in what all transpired with the dollar index. We had resistance at 98.76. Market topped out at 98.69. Before easing back a bit, kind of held that area above 60 or at 60. Then we're since kind of rolling back a bit here. Cable relatively held its own here after the prior day before that, reaching the 161% retracement here with the cable, and we've actually held our own here. So that was one of the things that we were looking at, in the sense that we had resistance up here if the dollar sold off initially, but I thought it was going to have a tough time to get beyond there. But I will say this about the cable: it has stayed relatively resilient, but of course we do have BOE this morning. I did see the Aussie dollar going and fall off. Employment, they were looking for the employment rate to increase, unemployment rate to increase, which we saw that. So it certainly has opened the door for the Aussie to go on in, or the RBA to go on and cut in time. Also, we got the BOJ. We're looking for a move potentially in the BOJ. Remember, we had our resistance, our initial resistance, and I was looking for that as an opportunity to get short with FOMC. If we jumped up to 854, we came up just a little bit shy. We made it up to 848, but we did want to see this market going and sell off a decent amount, and we did see. Let's take a look here with the dollar peso. We were looking for resistance at 1945 as we went into FOMC with secondary resistance at 1956. Well, it looks like we just about made it at 1945 at 44.9, and we kind of rolled back a bit here. I'm just going to touch here on the cross rates. You can see here the Aussie yen came right into support here, right into our bias chart support. I can see that here. But that might be a little bit of a tough call we mentioned yesterday, because the Aussie's weak. The yen was potentially, if we move back, would be weak. But we did come in right into that bias chart support here, and we're kind of bouncing a bit off of that. Guppy still holds its own up in here. And sterling odd make it evaded. Very nice run all the way up here to 184. We've eased back just a bit here. And Euro QE just punching a little bit higher. We're going to get into the news, so let's swing back. So as Fed cautious cuts support and dollar and Aussie whipped by jobs data. And we're also seeing, I guess we're seeing the euro continue to move up a little bit higher here. Oh boy, did we jump up. Look at this, 1063. We did jump up quite a bit here. The dollar found broad support on Thursday after the U.S. Federal Reserve cut interest rates as expected, but offered mixed signals about future easing, while weak employment figures hit the Australian currency. The greenback gained against major currencies, except for the Japanese yen, which posted its sharpest daily rise in almost a month on some safe haven buying. The Bank of Japan also met expectations by holding off on deeper monetary easing. There's such a lack of uncertainty on a number of fronts, said Nick Twidell, co-founder of Sydney exchange provider called Exchange. I think we will see more dovish central banks still. The biggest loser on the front was the Aussie dollar, which had its worst day in a month, as expectations for more central bank rate cuts leapt after joblessness hit a one-year high. The RBA has been focusing on the labor market for clues as to whether another round of easing is necessary. The Aussie dropped to a two-week low of 67.82. With the economy growing at the slowest annual growth in a decade and jobs being lost in the construction sector, it appears that the additional policy stimulus will be required, said Ryan Felsman. The New Zealand dollar briefly jumped 0.2 after June quarter domestic product, telling it higher than expectations, but being swamped by a rising greenback and expectations of a monetary easing in New Zealand. The dollar was steady against the euro, standing at 10.34, and flat against the British pound at 24.69 after overnight gains. The yen gained to 7.77 per dollar after touching a 7-week low overnight, with its biggest daily rise since August 23rd. The moves came after the central bank, U.S. Central Bank, on a 7-3 vote, lowered Fed funds rates on a target to 1.75% to 2% in light of implications of global developments for economic outlook. However, Fed Chairman Jerome Powell described U.S. prospects as favorable and the rate move as insurance, but his remarks were not as dovish as markets had hoped for, which lifted bond yields and the dollar. Projections published by the Fed policymakers expected rates to stay within a new range through 2020. In the short term, this hawkish cut should see the dollar well bid, given the path of interest rates outlined by the Fed is not close to that of the priced into the markets. And the yen rallies after the BOJ keeps policy steady. Japanese yen rallied on Thursday after BOJ kept interest rates on hold, while the dollar struggled to move higher despite the Federal Reserve offering mixed signals about the path for further easing. Elsewhere, the Norwegian krone is in focus as central bank meets. Focus is for the Norges Bank to hike rates, while in Britain, the Bank of England gives its policy decision later and prolonged uncertainty about the Brexit outcome. The Bank of Japan kept monetary policy steady as expected and signaled the chance of expanding stimulus as early as the next policy meeting in October. But some in the market expect the BOJ to signal a stronger chance of more stimulus in the context of central banks. The BOJ did not sound as pessimistic as expected, and they did strongly hint an extra step to come to Tan Yuan. And the dollar dipped slightly against a basket of currencies as it struggled to gain despite a more hawkish than forecast tone for Wednesday. With that, we'll just go and move into the charts. And we're seeing the euro continue to move up in here. Decent little move here in the euro. Well, you can see here, we stayed below this trend line, and resistance is going to come in right now at 1075 and then 1113. So looking at our bias chart resistance for today, and it's going to be 1075, 1113. 1075 is huge right here with this trend line, but The next key thing would be 1113. Now I'm putting 1113 because that is key there. If we do pop up, we'd make a run to 1113, but it's going to take some extra movement to get beyond that. So here we go, and we got the bottom of this trend line also. Wait one moment. Bear with me. Just want to post this in the chat room. Just go on and bear with me. Because this is moving right now, and they're discussing this here in the chat room. So just bear with me. Yeah, I should have gone and rebooted my system. But you can see we're bumping up right here against this trend line here. And let me just pop up something real quick. Apologies on that. Bear with me. Yeah, just need to open up a new browser on the, there we go, which I just did that on another page. Okay, but you can see here we're bumping up against this trend line right there, and that comes in at 1075 right there. Beyond that be this 1113. As far as support, let's go and move into the 2 hour. I'm going to go back to the same 1033. 1033. Right here. So it's going to be 1033. Let's go and move into the cable. We're just kind of hanging around here, but I'd rather move into the 2 hour. The 2 hour is what we used for yesterday, and yesterday we were looking about this 2573. Resistance right now is going to be right there at 2545. 2545 on the upside. Uh, 2543, that's good enough. And on the downside, 2413. I like that also. Just below this 2428 right there, 2413. coming in right there. So that'll be the support 24.13. And let's go move into the Aussie. And with the Aussie, we certainly saw that with the increase in unemployment, the door opening for a lower rates here. So we did go in and get past our bias chart support, which was at 68.08. We're pushing. This is right where we're going to move this bias chart support right there. Oh my goodness! Well, that's where we're at right now, right there. 67.81. That's going to be bias chart support right now. That's where it actually bottomed out at. It's going to be 67.81. And resistance will be, well, this key 68.31 level, you can see that right here. That's not that far away. Let's go and take a look at the 2-hour chart. $68.37. There you go. $68.37. You can see that just about there, right there. You see that? Perfect. 68.37. And let's go move into the Kiwi. We come into this 50% retracement, and also there's some good touches right here. So that's actually going to come in, and it dipped just below that, but it's going to be 67.84, and they actually got down to 67.80. So it's going to be 67.84. I don't know why I'm saying that. Yeah, 67.84. And we're here looking at the Aussie. Don't know where my head's at this morning. We've even gone even further. So support comes in right there. 62.90. And resistance will be 63.56. 63.56. Going to the dollar peso. Now we actually held above this 1923.6 yesterday. We did make a move towards this 1933, but it's still holding. And to me, this was such a big breakout area here. This 1923.6 set, and we're still holding above the 61%, and it must hold above that 61%. That I've actually kept this still for the bullish bet because this was such a huge breakout area here. So let's see what we can do. Now we had our initial resistance for FOMC at 1945, followed by 1956. Right here, 45. We had 45.5, which that's essentially where they've run out of gas about this morning. But we also were using up 1956.6 when I posted a chart. But you can see here we made it up to this 1945. I had 45.5. Let's see, we stopped at 44.9. We're kind of pulling back. That's still going to remain here, this 1945.5. If we get beyond that, it'd be 56. But 1945, bias chart support, 1932. It's going to be that 61%. We're actually going to move this a bit higher now. Looking for this market to defend. It's going to be 1935.3. 1935.3. So keeping it relatively tight. Now with that, we'll move into the dollar yen. Now the Bank of Japan wasn't as aggressive as potentially it could have been. And yesterday we had our bias chart resistance coming in here at 855. I was trying to work a limit at 854. We only got as high as 848, I think it was. And then there was a possible stretch up here, but they were not as aggressive. So let's take a look at resistance now. Which we came down here. This was our bias chart support, which was 787. We got as low as what, 777, and we've kind of popped back up above 803. Here's the issue: is that they're talking about being aggressive now for October or the next meeting. They're going to be aggressive now, and because we've had such a strong run here, it'll take a little while to take the air out of the balloon. So when we're looking as far as what resistance would be, let's move into the 2-hour chart. It's going to come in right there at 820. 820 for resistance. And support. Well, they came in just about there. So come in right here, call it 772 for support. And let's go and take a look here at the cash dollar index. Bit of a mixed bag in here. We talked about that. This key area is going to be 97.89. If we got a daily close below 97.50, I think it's 54 or 52, that would really open the door for us to go to 96.50. But a bit of a mixed bag in here. We'll look at the 2-hour chart to get a little bit better feel for this. So we're looking at it, resistance on the upside is really going to be 98.60. We could make a push here, but it's really 98.60 that's going to come in here. Actually, can even lower that and put it right there at 98.58. We are finding some support here at this 98.30 area here. And actually, can go a little bit lower here. That is a good area right here, this 98.30. We have some additional support here at 98.20 if they try and punch below that. This is key right here. We'll split the difference and call it 98.25. Okay, let's go move into the cross rates. So even broke in here, broke below the support. But got some good little bit of volume here coming in. We see a pretty decent little pair back here. See if we can see something on a fib. And the 50% comes in at 67. Well, let's just call it 68 even. 68 even on the support. And resistance is going to be right there at 68. Call it 68.40. Euro did you want to take that dip in here towards the 119 area here, and the euro is trying to pick up just a bit, but resistance now will come a little bit tighter now at 1969 for a day. And the support's going to be 1904 right there. Well, with the weakness in the Aussie, we were certainly able to go on and move in a little bit higher here with the euro watt. And God, we can remember when that was really moving higher and flying. We've made a bit of a move back here with the euro watt, but you can see some nice, the lines coming right there across here at 62.98. We're just a hair bit below that, but that's what we're going to look at for resistance. 62.98. So quite the move here off of that Aussie data. Support now coming right there at 62.26. Let's go into the Euro Kiwi. Well, once again, with the Kiwi under pressure, the same way with the AUD, we've certainly been able to go and move in higher here with the Euro Kiwi. Looking as far as resistance, we did go and get above the resistance level here. How much further we can go and push is actually comes in right there at 75. Right there. 75.41 on the upside. And support is going to be 74.38. Probably move that just a bit higher here, right there, 74.50. Now the Aussie yen came right into bias chart support. 73.15, and that's going to stay right there. But obviously, with the weakness in the Aussie, we're going to have to move this lower here. So bias chart resistance now is going to be right there, 73.70. Obviously, with BOE this morning is going to have an impact certainly on the guppy here. Potentially, we can still move higher here with this guppy. This one's interesting here. We're going to say 35.50 here with the guppy. $35.50. We had 35.55 down to 50. Support's going to be right there at that line, right there. You can see, which is 33.97. And let's go and take a look here with starting on. It's going to be right there for 84. You know, we may have to still push that a little bit higher with the weakness we have in Aussie. 84.38. That's 84.38 for sterling odd. Here we go. That'll take out this high right here. So it's going to be 84.38. Already had a pretty good run here, but obviously the weakness in Aussie and sterling's done well. Support's going to be 82.93. 82.93. Obviously, wider ranges because of the impact in here with the BOE. Now we'll go and take a quick look at gold. Now we're looking at the spot. And we certainly saw it took a dip here, mixed bag here with the FOMC. The market's still open to working lower. So looking at where the setup is, if there is a setup, I don't see one necessarily here. It's going to come in as far as resistance would come in right there at 1502, about 1502 and a half on the spot. So about another $4, a little over $4 higher. We'll see a little bit of volume coming in. Actually, you can make it right there, almost 1503 here. If they want to stretch it just a bit higher. Nothing I'm seeing here that's, we're still open to work a little bit lower, but 1503 we can, well, actually, only because we've got some volume there. That's on the spot though. Just a shade under 3. Very nice pullback here. I think it was Steve in the chat room during the FOMC who mentioned that at the time the gold was a good short. Right after the release of that, he said very good risk reward. He mentioned the same thing with equities. Equities actually moved higher initially, and then we started to fall off. So I mean, when he made that remark, I think equities moved up for another 5 minutes, and then they rolled over. So a couple of very prescient calls by Steve in the chat room right after the FOMC. And we saw the S&Ps come off. They came up quite a bit. Obviously, the BOJ had some difference. I actually got short and I added, and I went home underwater, but I came back. I was able to go in and exit out at 3,000. Came out okay, but yeah. But when I looked further back and saw how much further this thing rolled out, I actually sold this thing on the way up yesterday after it was really pressing higher, and decided to go and keep it. And actually wanted to come back and re-short, and I thought, okay, well well, I'm looking forward to setup as if they dip and then they come back up. Well, they didn't dip that much, but it still wasn't bad. I probably should have gone taking this short right there, and but look, we really came off, but we've come back quite a bit. Look at this. Look at this strong move back. A key thing with S&Ps is going to be this 3004. 3004. Crude, dead as a freaking doornail. Just completely dead. And Bund's relatively quiet, and 10-year yields just paring back a bit. So that's what we have for today. Thanks for joining us here on the European crossover webinar. I'm seeing the euro right now at 10.58, so it's kind of eased back a bit. We talked about that downtrend line. Thanks for joining us here, and we'll see you on the FX Daily Roundup.